Hey guys and gals, Kevin Bupp here. I've got some very exciting news I'd like to share with you before we jump into today's show. Now, after closing on Fund 4's first acquisition of a $50 million institutional grade mobile home park, we're adding a second irreplaceable piece of real estate to the portfolio, and it's coming into the fund with over $1.5 million of built-in equity for our investors day one. Now, when I say irreplaceable, I really do mean it. I mean, this is an affordable yet high-end waterfront mobile home park located in the Columbus, Ohio market. Quite literally, every single mobile home on this property is right on the lake, each with its very own personal boat dock, meaning a very high demand for affordable weekend getaway options, as well as year-round housing for working Americans. This is a true unicorn of a property, and you will not see another one like this come around again. It really is a one of a kind. A few other aspects worth noting. This park is producing stable and predictable cash flow day one. We're acquiring it with an excellent in-place Freddie Mac loan at a 3.3% interest rate for the next 8.5 years. This also includes a period of interest-only payments. Again, the simple supply and demand dynamics here are enough to get excited about. This is affordable lakefront real estate for both the working American families as well as folks looking to lock down a reasonably priced waterfront escape. Don't let this opportunity pass you by. Visit investwithsunrise.com to register for our webinar and learn about all the wonderful aspects of this property going into Fund 4. Again, that's investwithsunrise.com. Now, let's get on to the show. Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is real estate investment expert Brian Davis. Now, Brian is a recovering landlord and ex-employee who today invests $5,000 at a time in passive real estate investments. He's also a personal finance writer and co-founder of SparkRental with over 2 decades in real estate and finance. Brian owns fractional shares in over 2,500 units and regularly contributes as a real estate personal finance expert for Bigger Pockets, Inman, Best Ever Real Estate, and GOBankingRates, and many more. Along with his wife and daughter, he spends most of the year overseas, hiking, cooking, scuba diving, and sometimes surfing. It sounds as though he might not be able to get the surfing part, but maybe he'll fill us in with maybe some updates right there of his skill set there, and if he's learned a little bit over this time. But with that, guys, I'd like to welcome our guest of honor for today's show, Brian Davis. Brian, how you doing today?
I'm doing great, Kevin. Thank you so much for having me.
Yeah, excited to have you here. And the surfing thing, it's funny. I read the kind of a notation there, I forget what it said. Just basically, you're learning, right? You're learning the hard way by falling on the waves and probably having the board smacking your head a couple times. So
more than a couple.
Yeah.
No, I'm a terrible surfer, but I go out there with an
fun.
instructor and I just have fun.
Yeah, that's all that counts, man. Just having fun out there in the waves. So with that, Brian, I gave you the brief introduction there. Would love to have you maybe fill in the blanks for me. That was a very shortened intro. So maybe for the folks that aren't familiar with you and your story, tell us a little more about yourself, and maybe you'll back up a little bit prior to SparkRental, because ultimately I'd love to hear about what was the catalyst that ultimately pushed you to start the company.
Yeah, so I'll keep it really brief. I graduated college in 2003, had zero clue what I wanted to do with my life, as so many college graduates don't. And I fell into a job working for a hard money lender who happened to be an acquaintance of my stepdad's. So I ended up doing loans for hard money borrowers, flippers, burr investors. And this being the mid-aughts, everybody's making money in real estate, right? So I'm like, I can do this too. So I plow all of my spare money into buying up all these real estate investments. Zero clue what I was doing. I mean, no clue. And 2008 hit. I just totally lost my shirt. And not only lost my shirt on my investments, but my day job income dried up too, right? Because no one is taking out hard money loans anymore. So I had to totally reinvent my whole vision of my career. I went and I got a job with an e-commerce company that was selling basically legal forms for landlords. But the only reason I got that job was because I myself was a landlord and because I, had that direct experience with real estate investing. So, as they say, door closes, window opens, and things tend to work out, and it tends to be okay, no matter how bad the crisis looks in the moment. So my wife and I moved overseas in 2015. We moved to Abu Dhabi. My wife's a school counselor, so she knew I wanted an adventure, and she was open to having an adventure too. So she started applying to schools around the world, international schools, American schools around the world. So we moved to Abu Dhabi. I've got all these rental properties from back when I was actively buying properties in the aughts, working for this company full time, and then I get fired from that company uh, because the owner did not like that I moved across the world. He thought that I was not going to be as present mentally, I guess, just because I was less present physically. So that was, another crisis moment, right? Where, I'm living across the world. I don't know anyone over there. I don't have a network, trying to figure out what comes next. So a former colleague of mine decided to get together and launch an online business. That's how SparkRental was born. And it's been a very meandering road since then. In business, you have this one vision for what you think your business is going to be, and then the market tends to come along and tell you what your business actually needs to be. So that certainly happened with us. But in a nutshell, that's how we ended up with SparkRental.
And what year was that you founded Spark Rental?
That was early 2016, so over 8 years ago.
Okay. So just curious that initial vision, what did Spark Rental look like then, or what do you think it was going to be? And ultimately, what did it evolve into?
Yeah, so we we had this vision that it was going to be a one-stop shop platform for property management software for mom and pop landlords. Because at the time there wasn't really a good software platform for like the little guy, the little landlord. There are a couple now, but most of the really good property management software platforms are for the bigger enterprise property management companies. So anyway, so we went out, we hired this website developer to build out this software for us, and they ran off with half of our seed capital.
Oh boy.
Yeah, yeah, it was one of those sorts of stories. So we did not have enough money left to build the software that we wanted to build. And as a spoiler, years later, we did end up creating that software, but we didn't have the money to do it at the time because this guy ran off with our money. So we ended up focusing more on the education side of the business. So we launched a blog, we launched a podcast, we started doing webinars and online courses, free courses, paid courses, and really drilling into the education side of the business. And we started building up affiliate income. In particular, we started doing a lot of writing about lenders who specialized in working with investors and comparing them and reviewing them. And that became a source of revenue for us. And the courses started becoming a source of revenue for us. But it was around that time I got rid of all my rental properties because I realized just how much I had been subsidizing their returns with my own effort, my own labor, back when I was living in Baltimore in the States. But living in Abu Dhabi, I couldn't do that anymore, right? So it was a humbling lesson to discover that I was actually not earning very good returns on these properties when I wasn't there to mess around with contractors and show up on weekends and deal with difficult tenants. So I got rid of all those.
So you're relying upon a third-party management company, and like basically after the base level fee, and then the padded fees associated with their different vendor affiliates and so on and so forth, you weren't making any more cash flow. The cash flow was pretty much dried up.
Right.
Is that what I'm gathering from that?
That's what. Yeah, that's exactly right.
Okay.
So I sold off all those properties, but then I'm left in a situation where I'm teaching real estate investing and I'm teaching property management and landlording through our business, but I'm not actually an investor anymore, and I'm not actually a landlord anymore, and that kind of takes you out of alignment, right? It takes you out of integrity. So I started investing passively in real estate first through real estate crowdfunding platforms. I went out and I invested in as many of those as I could with relatively small amounts of money. And, and again, this let us write about them from a place of firsthand experience in our blog. At the time, I also was doing some freelance writing on the side. Actually, I still do a little freelance writing on the side. But I was able to write about, again, these platforms from firsthand experience. And then I discovered real estate syndications. And all the while, our core students had been asking us like, hey, I'm not quite ready to buy a property by myself yet, but can I just invest with you guys in one of the properties that you're investing in? And we kept saying no, because we weren't buying rental properties at the time, right? So my partner and I finally, after like the 50th person asked us this question, it finally dawned on us, like, maybe we should find a way to say yes to this. Maybe the market is trying to tell us something here. So we did a couple pilot deals. These were single family investment property deals, and the returns we earned were fine, but they were just way too much work. And it was around that time that I had started investing in syndications, and I was like, well, maybe we could try a syndication deal as a joint investment among our students, and that way each person could invest with relatively small amounts but still get exposure to these deals. And my partner said, well, I don't really know much about syndications, but sure, why not? Let's try it. So we did a pilot deal for a syndication, and we let each of our students invest with $5,000. I put in $5,000 of my own money, and it was very popular. People loved it. So then my partner asked me, hey, what's to stop us from doing more of these and doing these regularly? What if we did one of these a month? And I said, well, that sounds great. Can we do that legally? Is that legal? And so, we had to speak with some attorneys and go through all those motions. But that's how our co-investing club was born. And that has become the main focus of our business today, where we get together every month, we vet deals together as a club, and we all go into them together.
Okay. And so just to better understand the business model itself, is it a Reg A offering, to where you guys are acting like a fund to fund and investing, your funds into other respective offerings, or how do the mechanics work?
So that's the first question that we often get from people who hear about what we're doing. The answer is no. We are not a fund of funds. We are not selling securities. We're not a syndicator. We're not a sponsor. We are purely a flat fee investment club. So we charge either a monthly or an annual fee to be a member in our investment club. And what that gives you access to is deal flow on the one hand. So every month we're bringing in a different sponsor to present a deal. And then we will organize a joint venture LLC to collectively go in on that syndication deal together. Any of our members who want to. Every deal is optional, of course. No one has to go in on any of these deals, but anyone who wants to can do so with $5,000 or more. And then collectively, we'll be investing, 200, 300 grand, whatever it is for that particular deal. So we're surpassing the minimum investment for the sponsor, but each individual member of the club can invest relatively small amounts. So that opens the door to things like dollar cost averaging with your real estate investments, spreading small amounts among storage, multifamily, retail, mobile home parks, raw land, whatever it is. And, different sponsors, different geographical markets. So it's a lot easier to diversify when you can put small amounts across a lot of different deals.
Got it. And so then that investment, in that respective standalone LLC that you guys each throw $5,000 into. I mean, it lives independently. It's got its own P&L, it does its own books, but like that acted as a single entity investment into a larger syndicator or sponsors fund, correct?
Exactly. So each of these LLCs we create, it's one LLC for each deal. That LLC becomes the limited partner, the LP investing in the syndication deal. And then each of our members who are participating, they are fractional owners in the LLC itself.
How do you guys work out like the fees associated with like the legal costs of setting up the JV and the operating agreements and all those kind of things, and then the accounting fees and preparing K1s and all that kind of fun stuff? Is it just
it's a great question.
As its own independent business, and at that point in time, and the respective operating costs are pulled out of the profits of the LLC?
So what we do is when people sign up for a deal, we give them the choice. We vote on it. Do you want to outsource all of that to a company called TribeVest, or do you want to handle it in-house? So TribeVest, at least at this time, charges $150 per person per year. We believe that we can do that at half that cost, so $75 per person per year. So it's not nothing, but that's the cost of going in on these with a bunch of people and having a smaller minimum investment, as opposed to going out and investing them as an individual by yourself.
Understood. No, I appreciate that clarity there. And so let's talk about asset classes. I know you mentioned a number there, multifamily. I think it's on the website, hospitality, including hotels and Airbnbs, mobile home parks, which is our favorite, self-storage. There was a litany of others listed there. And so maybe, maybe speak to some of the more recent investments, what you guys are excited about here today. What are some of your favorite asset classes that you're really focusing on at the present time?
Yeah, so I mean, we are somewhat agnostic when it comes to asset class. I mean, one of our core values is diversification. So being able to spread, again, small amounts of money across a lot of different types of deals, a lot of different markets, a lot of different sponsors. That being said, some of the asset classes that we are in particular looking for today, or looking closer at rather. So light industrial, we like light industrial. We think that there's not some of the same risk profile there as maybe in multifamily. It doesn't mean that there aren't plenty of good multifamily deals out there, but there's been a lot of a lot of challenges in the multifamily industry over the last couple of years, as you well know. We love mobile home parks. We think that they are a great way to uh, protect against recession risk, given that it's the ultimate affordable housing,
Sure.
and it's the only type of property in the U.S. where there's shrinking supply every year.
Yep.
They're not building any more of them because municipalities don't like them. So, yeah, we like mobile home parks. We like light industrial. We actually met earlier today to vet a land deal. It's a 500 plus acre ranch that the sponsor is buying, and they are subdividing into 30 to 100 acre plots. So there's no construction, there's no renovation, there's no chasing tenants or property management risk or any of that stuff. They're just taking a property and cutting it into smaller chunks that are still somewhat large, but yeah, so it's a very low risk deal. It's also a lower return profile than we typically aim for, but that's okay, right? That's part of diversification. We're gonna hit some of these with high returns and others with lower risk, lower return profiles, and that's okay. It's also a short-term deal. It's under a year, so
Is that
that's
it?
nice
Just
too.
chop it up and sell off the individual parcels at premiums?
Exactly.
Okay.
Yeah. So
Yeah.
they're buying this at around 7,000 per acre. They're hoping to sell it at 10,000 plus per acre,
Yep.
because they're opening up that pool of buyers so much wider. Not many people can buy a 500 plus acre ranch, but a
Sure.
lot more people can buy 30 acre ranches. So that's the business model. It's a simple business model with relatively low risk, and we love that stuff.
Talk to me about being a member of the club, and then what does that look like? Different resources you have access to, but I think more specifically, what does the deal vetting process look like? I mean, what do I get? I join the club. What do I get access to? And then ultimately, I guess what expertise is part of that club that helps me better? If I'm a new investor, I've got 5K, I don't have a lot of experience, to help me make a better decision as it relates to put my 5,000 with this sponsor or not.
Yeah, so it's funny you ask that. People come for the deal flow and they stay for the community. So we aim for one deal vetting discussion per month where we get together, we vet a specific deal, we bring in the sponsor, we all grill them with questions. We also aim for one educational presentation a month. And the community aspect of this has really become where so much of the value lies, because we almost become like a hive mind as we're vetting these deals. We have all of these different people from all over the world, each with their own background, their own perspective, asking really sharp questions to the sponsor, which many cases never would have occurred to me to ask. So, and we get to the benefit of their expertise. So we have a woman in our club, for example, who's an insurance adjuster, and she's always grilling these hapless sponsors about, how come you only budgeted this much for insurance premiums every year, and don't you know what's been going on in the insurance industry? And it's great. It's great to have someone in the club with that background. We were vetting a deal last year that was in Dallas, Texas, and a woman in our club lives in Dallas and lives 5 minutes down the road from that property. So she was able to say, hey guys, I drive past this property every day on my way to work. And I can tell you firsthand that there is not enough housing for young professionals in this neighborhood or in this submarket. And that was what this multifamily property was really catering to, was young professionals. She said there's not enough supply of it and there's a lot of demand. So, I think that this is a good investment. I never would have known that, had we not heard her firsthand perspective on that, right?
Sure.
And that's the value of having an entire community vetting these deals together and all kind of coming at it from different angles and different, personal experiences and knowledge bases.
Yeah, no, that's great. I appreciate that. And just curious, the member profile, like who's the typical person that joins? Is it accredited, non-accredited, or do they have to be accredited? I guess that's the first part of the question. And then
Yeah.
yeah, and then the other is like, they experienced, they sophisticated investors, or they just, brand new green behind the ears, which is completely okay. But just curious as to, ideally what you cater towards and what the makeup looks like of the group.
Yeah. So one of our core values is inclusivity, and in particular, making all of these deals or only doing deals that are available to all of our members, not just accredited investor members.
Okay.
So we only consider deals that allow non-accredited investors at this time. That being said, later this year, we are hoping to launch a little like sub club for our accredited members and proposing deals for them periodically as well, so that they can have access and at smaller amounts to accredited only deals. But yeah, at this point, all of the deals that we review are 506B or like Reg CF or Reg A, allowing non-accredited investors. So our typical member is a somewhat to very successful professional. They earn a decent income, a strong income, not necessarily accredited yet, but they have some extra money on the side that they want to invest in real estate. They want the cash flow, the appreciation, the tax benefits of real estate, but they don't necessarily want to become a landlord. Because as you know, and as I know, being a landlord is a lot of work. It's not passive income. It's maybe semi-passive income, but it's not a passive investment the way that an index fund is a passive investment, or a real estate private equity fund is a passive investment. It's just not when you own properties directly, when you own properties yourself. So our members are typically people who they like real estate, they're excited about real estate. They don't necessarily want a real estate investing side hustle. They just want to write the check and still get those tax benefits and cash flow and all that good stuff. So that's sort of our target ideal customer avatar, if you will. Professionals, strong income, maybe not quite accredited yet, but excited about real estate and wanting to invest passively.
Yeah. Flipping the script here, we'd love to talk about the lifestyle part of it, right? I mean, I think a lot of folks, they have this dream, and it just, for whatever reason, they never really take it to fruition. But I mean, ultimately, you had a dream, you and your wife had a dream to live abroad and create a business that had sustainable cash flow that would allow you to basically live and operate anywhere you so choose to. And, as we're talking today, I know you're down in Lima, Peru, which is, again, quite awesome that, again, we're having this conversation now. Which is funny, looking back at your, you mentioned the e-commerce company you work for, where they let you go when you moved to Abu Dhabi, and it's different looking at the world today, right? It's a complete like 180 from employers and how they think about virtual employees and things of that nature. Whereas you got let go because you moved across the world, which you still had internet exists then, the connectivity was good.
Oh, yeah.
You wouldn't have skipped a beat, but for whatever reason, they thought that you would have. So. Talk to me a little bit about your lifestyle and just really that was part of the catalyst of the business as well, giving you flexibility and just living a life on your own terms.
Yeah. So my wife is a school counselor. So we've been abroad for 9 years now. We've lived in 3 countries. We've lived in the UAE and in Brazil and now in Peru. And she's worked at American schools in each of those countries. And we try to live entirely on my wife's income and benefits, which leaves us with a much more comfortable lifestyle overseas than if we were trying to do that in the States. I mean, school counselors get paid similarly to teachers, so not high salaries. But being overseas, international educators often get free furnished housing, which we get, which is awesome. We get free flights home to the US every year. We get premium health coverage for the entire family. So we actually can live a pretty comfortable lifestyle. It's not a ritzy lifestyle, but a comfortable lifestyle on her income and benefits. And then we save and invest all of my income. And the way that we have made this work, her job has a very stable floor. It's a relatively low income floor, but it's a stable income floor, but also a relatively low ceiling for her income. There's not much higher that her income can go in that career. Whereas I have the exact opposite. There's no floor whatsoever to my income as a business owner. I mean, it's
Sure.
but there's also no ceiling.
That's
so
right.
we can combine the higher risk elements and higher potential return elements of my career with the very stable low risk elements of her career to have them complement each other and to grow wealth much faster than the average family can. So that's sort of the nutshell of how we have structured it. And I part of what I've been trying to do ever since 2016 when we launched SparkRental is to cobble together as many different streams of income as I can from anywhere in the world. A couple of those are active streams of income. I mean, SparkRental is a business, and running a business is a very active source of income. I also, so in the early days of Spark Rental, when we were trying to get it profitable and get it off the ground, we needed to extend our runway because we were running out of money. So I picked up some freelance writing gigs, and I discovered that I really loved it. So I still do a little bit of that to this day, even though Spark Rental has been profitable for many years now. Those income streams from freelance writing create a bit of a floor to my income. So it's not quite the same roller coaster as if it were just a small business revenue. So those are active income streams as well. And then I also have a bunch of passive income streams, from real estate, from dividends from stocks, from notes. So, my goal with this is to cobble together as many of these income streams as we can that are location independent. So we can live anywhere in the world, and we have lived all over the world, and that let me control my time completely as well. Yeah. So, and I'll give you sort of the most extreme example of that is about a year and a half ago, I was able to take what I call a red month, or took the red magic marker and just crossed through the entire calendar for that month and said, I'm not available this month. Don't schedule any calls for me. I'll try to keep up with emails, but that's it. And we went and spent a month traveling around Patagonia and in Argentina. So it was great. It was awesome.
I love that.
And that's the kind of thing that, the average employee just can't do. No matter how good their benefits are, or no matter how much they like their job, they can't do that kind of thing. So that is part of what I have worked hard to assemble over the last 8 years, is all of these different income streams that give me freedom to work when and where I want.
Yeah, I love it. I love it. Thank you for sharing that. And you're giving me that same opportunity. I think just you sharing your story, and just really the vision of Spark Rental, and then making that, that platform available to the masses, to those that might share a similar dream or vision that you have, of just creating these passive income streams and giving themselves flexibility to maybe live life on their own terms if they want to step out in the entrepreneurial realm, or just get more income coming in so they can maybe scale back on their W-2 job, or maybe quit their W-2 job altogether and go travel the world. So I think it's a beautiful thing. It's awesome what you're doing here. And what I loved, what I should have asked before we went into that conversation was just, as it relates to Spark Rental, the platform itself. I didn't want to completely shift gears away from that. Is there anything else, maybe anything else that's of importance that we didn't touch on as it relates to the platform, what folks can expect, what it does, what it doesn't do, any of the above?
We have a bunch of free tools for active investors as well, because the business was originally founded as a place for active real estate investors. So we have a bunch of free calculators and interactive maps for real estate investors and that sort of thing, and a blog library of 400 plus articles. So we have a bunch of free resources on there for active investors. We also have a free class that we offer for people who are interested in passive real estate investing, but maybe aren't super familiar with it. It's called Hacking the Rich: 7 Secrets We've Learned from Private Equity Real Estate. And you can get there at sparkrental.com/hack. If you're interested. It's a quick class, like 40 minutes, 45 minutes. And there's no sales pitch at the end. It's just pure education. So we have a ton of tools on there, whether you're an active investor, passive investor, and come check out our club. I mean, we have a very generous refund policy because we know it's not for everybody. It's a niche audience or niche clientele. So come join the club, attend a couple meetings, and if you decide it's not for you, just let us know and we'll refund your dues, your membership dues.
Perfect.
So we only want people there who are really excited to be there.
That's right. Yeah, nothing to lose, everything to gain. So I love that. Well, Brian, it's been a pleasure having you here. I really appreciate you joining the show. And for those that want to learn more, is it just sparkrental.com? Is that the best place to find you?
Yeah, sparkrental.com. You can reach me personally at brian@sparkrental.com. We have a bunch of Facebook groups as well if you're interested. One for active investors with about 48,000 members, another one for passive investors, about 8,000. So yeah, we're all over all the social platforms as well. Okay. But yeah, reach out. Don't be a stranger.
Fantastic. Well, Brian, thanks for coming on the show. It's been a pleasure having you.
Oh, Kevin, thank you so much. This was a blast.
All right, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.